Welcome back to the channel. Today, we're diving into the intriguing world of initial public offerings or IPOs. While many IPOs make headlines for their success, some face a different fate. In this video, we'll explore what happens during the IPO process, why some IPOs fail, and what makes others succeed. So, grab your notepads, because we're about to unravel the secrets of IPO success and biggest IPO failures in history. The IPO process. First, let's understand what an IPO is and how it works. An IPO is when a company offers its shares to the public for the first time. But before this happens, the company is private. To have an IPO, a company must file a prospectus with the SEC, providing key information about the offering. They also hire investment bankers who act as underwriters, determining the offering price and other details. Once all the paperwork is in order, the company applies to list its stock on a stock exchange, like the NYSE or NASDAQ. Reasons for IPO failures. Now, let's delve into why some IPOs fail. Overvaluation. One common reason is overvaluation. If a company's stock is priced too high, it can discourage investors, leading to a flop. Poor timing. Timing is crucial. Going public during economic downturns or market turbulence can spell disaster for an IPO. Fundamentals and governance. Issues with a company's fundamentals or governance can also lead to failure. Investors need confidence in a company's leadership and financial health. Lack of interest. Sometimes, there's simply not enough interest from investors. Lackluster demand can cause an IPO to falter. IPO success factors. Now, let's switch gears and explore what makes an IPO successful. Strong fundamentals. Successful IPOs often belong to companies with strong fundamentals. Solid financials can attract investors. Investor interest. Generating investor interest is key. Companies that can build anticipation and excitement tend to do well. Realistic valuation. Getting the valuation right is crucial. Companies that set reasonable prices are more likely to succeed. Throughout IPO history, there are some IPOs that failed more spectacularly than others. The following list is in chronological order. 1. The Globe.com. The Globe's IPO flop in 1998 is one of the worst of the dot-com bubble era and in IPO history overall. The company's stock jumped an astonishing 600% on the first day of trading, raising $27.9 million in its IPO. But less than 2 years later, the NYSE delisted the stock after it fell below $1 per share. 2. Pets.com. Pets.com's IPO makes the list of worst IPOs in history largely because of how quickly the company's downfall happened. After raising $82.5 million in its February 2000 IPO, the company filed for bankruptcy a mere 9 months later. 3. Vonage. Vonage's IPO in May 2006 was so bad that the company was eventually sued over it. And 3 U.S. investment banks received fines from the Financial Industry Regulatory Authority in connection with the IPO. After falling short of the initial $17 price point, share prices continued to tumble, eventually bottoming out in the peak of the Great Recession at under 50 cents per share. 4. Ameros. Biotech company Ameros was one of the worst IPO flops of 2009. The company saw its stock price decline 36% in the worst 2 weeks of trading alone. Over the years, the company's share price has seesawed, most recently dropping below $10 per share in October 2021 and hovering there through the beginning of 2022. 5. Etsy. Etsy ended up being one of the worst IPOs of 2015. After its stock price nearly doubled from $16 to $27 on the first day of trading, the trend began to move in the other direction with prices eventually falling below $10 per share. The stock has since rebounded, but Etsy is notable for being one of the worst performing IPOs in recent history. 6. Uber. Uber's IPO in May of 2019 was deemed a Wall Street flop after the company failed to meet its expected valuation of $120 billion upon its debut. While the ride-sharing company aimed for a $45 per share price at opening, it opened at $42 instead before closing down at $41 per share on the first day of trading. 7.
Smile Direct Club.
Smile Direct Club's first day of trading in September 2019 ended up being one of the worst IPOs in decades. The stock was initially priced at $23 per share, opened at $20.55 per share, and continued to fall throughout the trading day, eventually ending down 27.5%. 8. Root. Root Inc., an auto insurance startup, looked promising enough when its IPO raised $724.4 million in 2020. Since then, the insurtech stock's share price is down nearly 90% since its initial offering, and the company's valuation has been cut in half. 9. Casper Sleep Inc. Casper Sleep's 2020 IPO got off to a shaky start, with shares trading at $12 to start. The company revised its IPO price down from an initial target range of $17 to $19 per share. The IPO put the company's valuation at around $470 million, well below the $1.1 billion valuation it had previously garnered through private fundraising. 10.
Robinhood.
Robinhood's initial public offering in July of 2021 was deemed one of the worst IPOs ever for a company of its size, with shares falling as much as 10% within minutes of the opening of trading. The company ended its first day of trading at a $29 billion valuation, well short of the $35 billion valuation that had been expected. IPO investing holds the potential for rewards, but as the flops listed here show, there are also serious risks involved with trading IPO stocks. If an IPO fails, it can often be chalked up to the IPO's valuation being off the mark, an underlying problem with company fundamentals or leadership, or maybe the initial public offering occurs at a bad time, for one reason or another. Whatever the situation, it's important for individual investors to research upcoming IPOs to determine whether they make sense as part of an overall investing strategy. If you found this video insightful, don't forget to like, subscribe, and share your thoughts in the comments below. And as always, stay tuned for more fascinating insights into the world of finance. Thanks for watching.